We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up BA. We are on a 12-month time frame. Price action, last candle to right hand side is a bullish green candle. Second last candle is a bearish red doji. Price action is within that area. So our market's consolidating, so we're waiting for the breakout. We do have price action. Overall, higher highs. Price action. Overall, lower lows. Midpoint. Also adding second level lows, third level lows, and fourth level lows. Current price is sitting at 115.19. So if price works its way up, it can tag that white resistance line sitting at 118.65. If price pushes up further, it can head to the next resistance line at 137.92 before tagging the midpoint within that area, which will be near the numbers of 128.64. If price drops down, it can tag that support line in white, sitting at the numbers of 98.66 before tagging the midpoint nearing the numbers of 109.37. Let's take a look at what's going on in the market. So if price action break out of the second to last candle of the market and we receive that push up, where market is coming from. So if we think about drawing a imaginary line coming down from the first candle of the market, which is a bullish green doji. So price second, the first, second, and third last candles in that consolidation, slight decline. So if you think about that market coming down with a red candle, identifying the first, second, third, fourth, market pushed up, came to the midpoint, retest, won, and then it reached overall high highs, came back to retest, and if we receive the engulfment candle price action towards the second last candle, market's pushing up for that second time. Now, if price action drops down from the area of the second last candle, it'll identify as markets coming from a high. So what did we receive at the high? We received a spike up with the fourth to last candle of the market and the third to last candle of the market. So that area is identifying some type of double top. Market pushed down, broke the midpoint. So what price action is doing, what the second last candle is doing is coming back to retest that third to last candle, and the market pushed down, and then it consolidates sideways with the price action candle. So if it pushes down further, it will look like this: first, second, third, fourth, break, retest, and it'll follow up with a bearish red candle engulfing down. Working our way to the 6-month time frame. So price action on the 6-month time frame is reading as a bullish green candle. We are looking for the engulfment towards the second to last candle now on the 6-month time frame, not just the second, but probably that third to last candle, which identified price action can be working its way to that resistance line in white near the numbers of 118.65, and then we're looking for the break and retest, or maybe bullish green candles pushing up to engulf at least the third to last candle buyer to push that market up. So that market will look like this. It will look like overall market came down for that first leg, second, third, fourth, came back to retest for that decline W, created some momentum. So what the third to last candle did was came back to return to that previous side, and we're looking for that market to push up. And that'll just identify as an overall W, first, second, third, get the engulfment, markets work its way up. Headed down to the 3-month time frame, price action 3-month time frame is reading as a bullish green candle. So we do have the engulfment towards the second last candles. That's why price action did push up to second level lows, but we can see that price action having time to break that second level lows. So we are looking for that break of that resistance line. If that market drops down from this area and let's say it doesn't break through that resistance line, we can look up and see that incline double top for that price second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th and 11th candle in the market created that M structure. So market spiked up twice. You'll see that as we walk down the time frame. So it's a double top, a double retest, and markets pushed down once, came back to retest the second level lows with the price action. If it pushed down further, it'll push down. It'll tag the area and push down. Working our way to the monthly time frame. So price action on the monthly time frame coming off that overall lower lows of the structure. The previous side of that price second, third, fourth, fifth, sixth, seventh, eighth, ninth candle in the market, 10th and 11th candle in the market identified there may be a reversal in the market coming up, and the market did eventually identify that reversal from this area here, and that's why this market is pushing up. So once that market did spike this low, it did have enough momentum to push down. So it's like a first, second, third, and market's pushing up from that W formation. So this is why we're looking for that break and retest for that market to push up further. Working our way to the weekly time frame, price action on the weekly time frame. So the market getting a little bit choppy on the weekly, so daily is definitely going to be more chopped up. On the weekly time frame, price action reading as a bearish red doji cross side by side within that second last candle. So what's happened is that third last candle pushed up, the second last candle retest that SR line that it broke, and it received a push, and then price action just worked its way sideways. So we are looking for price to engulf the second last candle to push that market from this area. So that market is consolidating side by side candles, prices within that second last candle. Working our way to the daily time frame. So price action on the daily time frame is reading as a bearish red doji cross. We still have that consolidation with price second, some of that third, fourth, fifth, and you can maybe add to six, maybe not, but overall structure, we can see that market, we are looking for that breakout, in which we can see that slight incline. So if that market keep on pushing up, then that means that market is creating some support from the third to last candle and the second last candle. But that price action is a doji, so we are looking for that breakout to at least that second last candle to push that market to the level. So it would think about it as price action, resistance, the midpoint, and we have a low. So we can see that market, when it did break into that first resistance line, it broke, retest, pushed up, retest the midpoint, pushed up to the high, came back to retest again the midpoint, and we're going to see if it's going to push and break out. And if so, like some type of double bottom or triple bottom trying to form in that area, we can see as we walk down the time frame. So now we're on the 4-hour time frame. We are above the midpoint that we're going to add right now. We're going to place a zone around that area, a little bit above, a little bit below, so we can take a look at what's going on and what's happening. So what's happening in that area, we can see that price broke into the zone, retest the zone, received a push outside the zone, retest the zone, and so far it's just consolidating on top of that zone. So if we get the engulfing pattern towards price second, third, so we're looking for a bullish green candle to start working its way up. And if not, and that's coming from which would be break and retest. So it's the first, second, third, fourth, retest and receive the push. Double bottom is created in that zone. And if it drops down, that will be dropping down for the fourth leg. So let's draw it out. It'll look something like this: first, second, third, and market start working its way back through that zone, and you're looking for the break and retest. Market could be coming down, but we can see price action is on the top of that zone. So we're looking for the engulfment towards the second, third, or fourth candle in the market, unless market price break through that zone and work its way down. Headed down to the 3, consolidation. So market broke, retest, consolidated. Headed down to the 1, same thing, break, retest, consolidation. Last 4 candles in the market. 1-hour time frame, same as well. Overall, break, retest, consolidated. Now some patterns trying to form. So we can see that spike down with this area here. So we can see that market identify the break and retest, which we can see that slight for that first, second, third. If it follows up with the bullish green candle, market work its way up. Okay, guys, this is Cam Jones, FX, BA, Stock.